All right. So we finished a week where we saw stocks sell off, but then we had a Friday of recovering stock prices. It's good to see a green day. It could have been a pretty red week, but today we had the markets bounce back a bit and give us back some of those losses we experienced earlier in the week. The Dow came back about 1.187. Uh, the S&P was up 1.09%, NASDAQ up 1%, and the Russell was about 0.94% higher. So it was good to see that green on the screen. I think part of it was the PCE report that came in the morning was positive, and that enabled the market to rise on some positive news that inflation is being controlled and the Fed will not have to be as restrictive going forward. And overall, it's good news. We don't want high prices. We want reasonable prices. We want reasonable price increases from year to year. So that was good to see. As I look at other things around the market, the bond market, bond prices went up today because rates dropped, or really they work in tandem. As the prices of bonds go down, um, rates go up, and the opposite. When bond prices go up in value, rates go down. So that's what happened today. So bondholders were holding bonds that were a little more valuable at the end of the day. So that was good. I've been buying into bonds every time that rates go up. I think the rates that we're seeing will probably be not as high in the future. So I'm good with buying some bonds and really locking in a nice interest rate going forward. Looking at the biggest, most valuable stocks that are out there, Apple was up 1.88%. Geez, Apple's closing in on $4 billion of market cap. That's incredible. It's just breaking away from NVIDIA and Microsoft. Both of those are just doing great. NVIDIA was up nicely at 3% up to about $3.3 trillion. Microsoft is at around 3.2 trillion, and Microsoft was pretty flat. Amazon's been on a really good ride recently. If you look at the last month for Amazon, it's done really well. It's good to be an Amazon stockholder. Google has been doing really well for the last month as well. Today had a good day, 1.5% higher. Meta had a down day, but Meta's awesome. I'm glad that I own the stock. So it was down 1.73. Tesla was down 3.46%. What's going on with Tesla? Now that stock, man, it is kind of a fan favorite out there. A lot of people love Tesla, and Elon Musk is a pretty popular figure out there. Broadcom has had an awesome 2024. It was up 1.13. And then Berkshire was right there, right under $1 trillion of market cap at 0.92%. Also heard Berkshire is buying into that weakness in energy and buying more Occidental Petroleum. So they're loading up more on Occidental. We'll see if that starts to work for them in 2025. If oil prices go up, then those energy stocks are going to go up with it. So those are the biggest, most expensive stocks out there. Looking at different sectors, looks like real estate did really well. And, as rates come down, real estate prices or real estate stocks go up. So that looks good. And then technology was up 1.5. We saw that the top companies out there, Apple being the biggest market cap company, it's a technology company, it was up. So that's what really helped that sector go up. Utilities were up, financial services were up, industrials. There's a lot of green on the screen. It was a real green day. For the month, the best performing sector for the month is still consumer discretionary, and then technology, communication services, and the worst performing energy, materials, real estate. Again, Warren Buffett's buying into Occidental, so he's using that as an opportunity to buy at a lower price. So that's what's going on around the sectors. I have a string of stocks that I wanted to go and since it's the afternoon on a Friday and I've got a couple hours, so I thought I'd do a lot of my analysis kind of on a live stream. And if you have a stock you want to look at, you want to take a closer look at, please put it in the chat. We can look at it. If you have a topic, put it in the chat. We can discuss it. But what I'll be doing is I'm going to look at OpenText New, which is the bank down in Brazil, and AMD to get started. And I'm going to look at these quite closely and do a full evaluation of each. And hopefully you find it interesting. Again, if there's a stock out there that you're interested in, put it in the chat and we'll take a look at it. All right, so let's get rolling with OpenText. And OpenText is a technology company. I kind of put them in, and it's correctly labeled software application. And when we look at OpenText, it's a company that helps businesses go online. If you're going to be producing websites, applications that are accessed over the internet and so forth, you're probably going to use OpenText technologies and start using them. And I really like companies that are software companies. I think there's a lot of advantages to them. This particular company, based on their performance, is doing quite well. And performance in growing their revenues. The revenue growth for the trailing 12 months is about 11%. It has been slowing down. Let me take a look at the monthly. You can see that when I look at the quarterly, the company is slowing down. So what's going on with this slowdown? This could be a concern. And that's what's probably driving down the stock. We look at the stock, it's down 33%. I think they guided and said, hey, we're beginning to see a slowdown. And that's what's scaring away investors, and the stock price is really dropping. So that's one thing to be aware of is, okay, so they're beginning to drop revenue. At what point are they going to start to grow? And what's the story behind the drop in revenue? They were growing nicely in 23, 24. But you can see that in 22, not much growth. Before COVID, not much growth. So it's somewhat of a cyclical company. They have boom periods and then slow periods. They're beginning to hit a slow period. So, all right. So this is going to be a slow grower. Why do I like software companies? Well, they have very good margins. In the case of OpenText, 76% margins. Even though the revenue is slowing down, the margin rate is really good on a software company. So that looks really good. Free cash flow is coming down, but it's still at 681 million. So since it's a slow growth company, I would say that it's worth about $7 billion right there where it's being priced. Let me make sure the balance sheet looks good. And when I say the balance sheet, I like to see that they can pay off their debts using EBITDA in less than 3 years. In this case here, they have cash of 1 billion, debt of 6.68 billion. So that means they have net debt of 5.68 billion. The EBITDA is 1.56 billion. So just doing some rough math, we are roughly 3.5 times EBITDA to get to that net debt. So that is higher than what I like to see. So we have revenue that's beginning to really slow down. That's a red flag. And we have a balance sheet that is not in really, really solid footing. There's too much debt on the balance sheet. So those are two red flags. So I'm beginning to think that this may not be a good stock for me to really pay a lot of attention to. I think they've got some problems to solve before they become a really popular stock. And they need to start growing again in order for it to see its stock rise from this point. Looking at the 5-year, They have had periods where the stock really rose nicely, but then they had a really significant drop. So it's been up and down. Over the 5-year, it has been a loser, down 36%. So that's to the extent that I'll analyze open text. I don't think it's going to be a good stock for me to watch. And most definitely, it's not a good stock for me to own. So we'll move on. So that is open text. The next one on my list is AMD. And AMD came up in the morning live stream. And when I looked at the fundamentals, it looked good. And I wanted to go, deeper and see, hey, is this a good stock to keep an eye on? Semiconductor is a good industry to buy. You just have to buy at the right times and sell at the right times because it's cyclical. It goes up and down. AMD over the last 5 years, you'd be doing quite well. You'd be up 170%. You had really nice rises, but it's given up some gains, but it's really had nice rises. We have more recently have seen a pullback in AMD from the top to where the stock is trading. It's about a 43% drop. And today it was fairly flat when NVIDIA was really doing well. Now, AMD does have products that go into the data center, which is good. That's what's really hot right now. NVIDIA's GPUs are really in the data center and are doing really well. So looking at AMD, I wanted to take a look at their fundamentals and put them into a valuation spreadsheet. Let me take a look at the fundamentals high level, and then we'll put them into a valuation. So they're a $193 billion market cap company. Their PE is really high this year, but it's supposed to get a lot better. When we look at the forecast, what analysts are expecting, there's 29 analysts that are covering the stock, and all analysts are saying that it's going to go up, that they have a very prosperous future ahead for the company. And their fiscal year ends on the 31st, so it's going to end soon. And then they're going to grow nicely. Their revenue growth is going to be good next year. Then in 26, it's going to be good. 27, it's going to be good. So those are really good growth rates. Okay, that looks good. Earnings per share is going to expand. And you see that the forward PE is really coming down to a low number. What I would expect is the stock price is going to rise because as the market sees that they start to grow, they're going to reward, the stock by, more investors buying in and the stock price going up. So I think it's a pretty neat stock to look at. I think it may be a nicely discounted stock, and buying at the right time could yield a really good return in investing in AMD. All right, so I got this spreadsheet open. Let me just look at one thing. So you see this, the most recent quarter, the revenue expanded quite well. Very good. That's good to see. Very different than OpenText. OpenText was showing kind of a collapsing revenue growth. AMD, we're seeing an expanding revenue, which is what we want to see. We want to see expanding revenue, expanding margins to make lots of money. I looked at the gross margin earlier today. It's 52%. That's good for a semiconductor company, and they do produce free cash flow. All right, so let's take a look at a valuation spreadsheet. Now, I'm not going to go over open text, so I will use this for AMD. So AMD, for now, I'm going to go with an 8% discount rate. The free cash flow that we saw for AMD for the trailing 12 months, it's $1.556 billion. Now, in the past, it was far better. They are going to grow nicely. So I'm going to go with this trailing 12 months, and I'm going to probably grow it at 15%. Now they're probably going to grow their revenues higher than 15%. I like to be conservative. And I'll go with a 4% growth rate from there. This guy, I'm going to add 15% to it. So the intrinsic value, the free cash flows are not very high. That's been one of my complaints of the company is they just don't produce a lot of free cash, which has been unusual. And this is for years. When I look at AMD, they don't produce a lot of free cash flow, which is somewhat strange. All right, so we got our free cash flow forecast out there. Now let's take a look at their cash and debt position. So the cash on the balance sheet, $4,540,000,000, and then debt is 2.24. Okay. So when I add cash, take away debt, we only get to $57 billion of value, but the market cap for this company is much higher. I've always had this problem with AMD is I can never get it up to the equivalent value. Like I've owned Broadcom, I owned Qualcomm, I own semiconductor companies, and they just value far different because they produce more cash. In the case of AMD, they just don't produce a whole lot of cash, which is a limiting factor when I look at the company. All right, so shares outstanding was 1.62. So it's, the cash flows just don't sustain that market cap. And cash is really what I depend on most. It's 66% of my valuation. So this one isn't going to go anywhere, unfortunately. When I look at their earnings per share for 2025, it's going to be $5.50. It's growing really, really nicely, which is good for the company. So $5.15, and I'll probably grow it at 30%. Since it's a growing company, I'm going to give them a PE of 36. And you can see that earnings per share will get us to a valuation that actually shows AMD discounted. But, I'm an investor that depends on free cash flows, and it's not producing enough free cash. Free cash is really important to a valuation for me. So on this one here, I'm going to pass on AMD. If the market will likely probably give these guys a little bit of a lift. But the thing about AMD is you could see that there's a lot of volatility. The stock goes up, comes down, goes up, goes down. It doesn't have a clear direction. Whereas if you look at Broadcom, which has very good free cash, Broadcom just has a good upward slope and has really outperformed AMD. For some time, you could have AMD was actually worth, or the stock price at least, was higher than, was performing better than Broadcom. Broadcom has surpassed it and done a lot better. I think a lot of investors are like me. They look at free cash flows and value companies based on free cash flows. So AMD is a pass. So we're passing on OpenText. We are passing on AMD. Now let's look at new holdings. And if you joined the live stream and there's a stock you'd like me to take a look at, please put it in the chat. We'll take a look at it. If you have a topic you want to talk about, put it in the chat. And I appreciate you attending. All right, so we are through AMD. So New Holdings is like a new generation bank. They're down in Brazil. Mexico, Colombia, Cayman Islands, Germany, Argentina. It's a bank that's really growing well. So when we look at Bad Omen, good to see you. It is going great. How are you doing? Getting ready to celebrate the holidays. And I thought, hey, man, be nice to live stream, say hello to some friends online. Hopefully, you're having a nice afternoon. All right. So, New Holdings is a pretty interesting company. Their growth rate is quite interesting. And when we look at their forecast, 9 analysts cover New Holdings. It's discounted by 50% if you look at what analysts have to say. And looking at the 1 year, wow, man, we had a big drop recently. The stock dropped 34% starting on November 12th. So less than a month and a half ago, it started to drop. And it's had these severe drops along with the quick rise. Back here on July, it dropped 21% in less than a month. And then it quickly recovered those gains and went past the previous stock price up to 35%. So, man, this is looking pretty interesting to me. Let's do a full valuation on New Holdings and see if it's a interesting stock maybe to start a position on. Let me catch up on some comments here. Yeah, thanks, Bad Omen. I do have some nice plans, some good family time, kind of hang out. Black Swan Investor, man, you're all over Discord, and I appreciate that. Thanks for bringing all your content and your comments. I think you're right that we should go with the higher discount rate, but I don't know about 20%. 20% that'd be pretty damn high, but we can talk about it. Tell me why 20% is extreme. If 20% means that I'm guaranteed that I'm going to earn a 20% rate of return, and I might even have a discount on the stock. So I was thinking on New Holdings, I would go maybe to 11 or 12, but every investor gets to make decisions on how they're going to value a company, right? I have a tool set. I created my tool set. I use principles that I've learned. I have an MBA, I have an education in accounting. I understand finance. I don't understand the arithmetic. I also understand why we do valuations as such, why we use free cash flows, why we use earnings per share. And I try to understand how the great investors like Warren Buffett invest. A high discount rate of 20%. If I have to discount at 20%, I'm probably not in the investment to begin with because I'm probably thinking that's too risky for me. I invest in Bitcoin. I'm not afraid of risk, but I have a lot of choices when it comes to stocks. And rather than take too much of a high risk, I'll just move on and buy something that's lower risk. So let's take a look at New Holdings and keep rolling. Man, the comments coming in. Thank you so much. XDiv, what's up, man? Happy holidays. UNM. I've looked at this company over the years. Let's take a look at it. I believe they're an insurance company. Thinking because Brazilian treasuries are at 15.4. You make a very good point, sir. Very good point. Man, that is a well thought out response. Okay. Yeah, gotcha. Let's think about that. You're influencing me. Very good. Okay, so you're a holder of UNM. We're going to look at UNM. Let me finish my thoughts on New Holdings, and then we're going to look at UNM. Okay, so we're going to look at New Holdings. And when I look at a bank, I don't use discounted free cash flows. It's just not the right thing to do. So what I do is I look at the earnings per share that I expect is going to come out of this bank, as well as look at the book value and try to project where the book value will be. It's pretty involved. Here's what I do for Citigroup, and this is going to take some time. So what I'm going to do is I'm going to try to short circuit this and get to a quick valuation so that I don't spend 3 hours looking at new holdings. I'll try to expedite it as much as I can, but what the heck? We got all weekend, man. We can just analyze it and see what the heck this company is worth. So I've analyzed several banks. Financial services have done really well. I think it's either the best performing sector or one of the best. So it is not a bad place to be looking for good stocks to buy, because the past doesn't exactly tell you what's going to happen in the future, but it certainly gives you good ideas. And so looks like black swan investors getting in my head. I'm going to go with 14. That's about as high as I can go on a stock, man. So we are looking at new holdings. Okay, so the market cap, and I'm going to move all this information over to another screen so I can use two screens and use the advantage of dual monitors. Man, I'm all over the place here. Okay, here we go. Market cap, 49 billion, 890 million. Shares outstanding, we have 4 billion, 810 million. Okay, so the stock price is at $10.38. Now, this information here I have to collect, and it's quite tedious, but let's just go ahead and try to crank through it. So we're going to go price to book. So we're going to go on the balance sheet. And you know what? I think I'm going to punt on this one. It's just going to take too long to update all this data. And what I will do is I'll look at the projections that analysts have on it and try to make a sense of the projections instead. So we have 9 analysts covering new holdings. The growth rate they're expecting is 28% in 25, 23, really 24% the year following. Earnings per share of 64 cents per share. And the valuation will be a PE of 16.31. So this is looking good. The one thing I would want to look at is ask Google if they can give us any kind of economic forecast. So the Brazilian economy is expected to experience moderate growth with some challenges and opportunities. The GDP growth is projected to be around 2.2%. 2.2 isn't all that great. I think the US is going to grow better. I thought Brazil was growing much faster. So that's not very good. Inflation is at 3.8%, which isn't too bad, but the growth isn't very high. Other countries are going quickly, but other countries are also kind of in a world of hurt. Some economies are experiencing a lot of inflation. So I thought Brazil was growing much faster. I've been corrected on that. I think that the stock presents an interesting proposition to an investor, right? I think the stocks, if it catches the right momentum, it's going to rally to the upside. It's really beaten down over the 5 year. You can see that when it first came out, it probably IPO'd here. It really sold off, but man, investors that got in early have really been doing well. I know Scott's due diligence. He covered this stock way back when, and he thought it was going to be a good stock. He certainly was right. And New Holdings, I think, is going to have a lot of potential. So I think it's a pretty good idea. I think it's a little risky going to Brazil. The growth isn't going to be all that great in Brazil. So maybe that's one reason to slow my roll when it comes to New Holdings. But I think it's a pretty good idea. All right, so let me catch up here. All right, so let's go over UNM. Nice. Good return on this stock, 62% gain. I believe these guys are in the insurance business. Wow, look at that chart. Very good. Nice upward chart. Looks good. Unum Group, together with its subs, provides financial protection benefit solutions primarily in the US, United Kingdom, Poland. Internationally, it operates through Unum US, Colonial Life. Okay. So it's a financial services company doing insurance, life insurance. And it's doing quite well from a stock performance perspective. Beautiful. And it also pays a dividend. So you win two ways. The market cap's only 13 billion and the revenue is 12.8 billion. Insurance has been working, and what's impressive is this is pretty smooth and to the right, up and to the right. Very good stock. So the company, their growth on revenue, nothing like record breaking. It's just good growth, but like 3% last year, full year, 4.49% in the trailing 12 months, flat in 22, and it dropped some in 21. Okay. Not very good margins. I'm going to compare it to a stock that I do own is Allstate. So Allstate issues out insurance, and they also they underwrite it. They're the ones taking the risk. Now let's see what their margins are. Gross margins are about even worse, and they actually had trouble in 22 and in 23. These guys, their margins are actually better, double that of Allstate. And the other company that is quite good is Progressive. And one more would be Chubb. That's the company that Warren Buffett started to invest in, insurance. Profit margin is better. Wow, Chubb's looking good. So Chubb has the best margins, and Unum is number 2, and then Allstate is number 3. This has been doing well. 23, not quite as well as is Unum. So Unum's been getting it done. Free cash flow, it's been somewhat consistent. And since it's a slow grower, I mean, I think they're fairly priced. Let me look at their balance sheet real quick, but I would have guessed that they're like worth 12 billion, 13 billion because they're a slow grower. They're not like setting any records on the revenue growth. When we look at their balance sheet, make sure actually insurance companies, their debt could be different, but not in this case here. So cash 2.15 billion and then debt 3.6 billion. So they have very little debt. They have a lot of EBITDA that they can pay off debt. This is a really solid company. Can they continue to go up? Absolutely. Are they reaching kind of a peak high? Yeah. They're operating really well. Margins are really good. I think if something's working, I wouldn't sell it, but it's up to you. You know, what do you think is going to happen at Unum? I don't know the company really, really well, but I can tell you, I looked at it, a couple years back and it looked okay. It's looking pretty good. Chubb is looking the best in category. It looks like CB, Black Swan Investor. Yeah, the things that I'm liking about CB is their margins were better than Allstate and Unum. So that looked really good. It was substantially more than both. Free cash flow looks good. What's their growth look like? They're growing nicely. Yeah, this is a good stock. Warren Buffett knows what he's doing. So let's take a look at CB next. Thinking maybe I need to sell my Allstate stock and buy CB. So ex-div, I think UNM looks good. It's been performing really well. I do think the stock price has gotten pretty high. And I think you came into the conversation thinking, should you lighten your position, sell? I mean, it wouldn't be a bad thing. In like what I'm thinking of doing is maybe I get out of Allstate, which I have a gain on, and get into Chubb. I might do that because Chubb's showing better, fundamentals, better growth, and better cash flow. So I'm going to value CB and maybe make a switch just to tell you how my investing approach goes. All right, so CB, let's take a look at CB and evaluate and compare it to Allstate, which is something that I own. So here's Allstate. I discounted at 8.5. Yeah, you're welcome, XDiv. Good to see you. And you can see that I still show it as a discounted stock. So it looks like a good stock. Let's put CB in there. This will be a head-to-head matchup between these two stocks. Now, they're not identical companies. They're in the same industry, I guess, but they are different. All right, so I'm going to leave that alone for now. And I'll start getting the data from Chubb on another screen, and then I'll put it into the screen we're working on. So the trailing 12 months for cash flow on Chubb is and it's been growing really well. Free cash flow has been growing. Really good free cash flow margin, 27% free cash flow margin. Looks really good. So I'll grow that by 10%. It's 10% growth there, 4% after that. So these guys, I mean, they have very high intrinsic value because this cash looks great. Make sure I didn't make a mistake. No, looks good. And their cash has really grown nicely. I mean, Warren Buffett, he likes cash. I like cash too. So cash flow looks great. Let me update the market cap and all that good stuff. Shares outstanding, 403 million. So we got cash is 690. And debt is 22 billion. So this is looking really good. They produce a lot of free cash. And let's take a look at their forecast and see. Analysts think it's only discounted by 5%. And the earnings per share. So earnings per share are going to grow modestly in 25 and then again in 26. Okay. And in 2025, it's expected to be $24.40. They are growing nicely. They're growing faster than Allstate. And I'm going to grow their earnings per share by 4%. So overall, this looks really good. Chubb looks really, really good. It looks better than Allstate. Here's Allstate. So I'm going to think about switching. Now, I don't want to switch in the month of December because I don't want to pay taxes. I'm already going to pay more taxes this year than I've ever paid my whole life. Personal record. Not happy about it, but that's just the way it goes. And maybe switching horses in 2025 is in order. So I'm going to watch CB and maybe switch next year. So, man, look at that. We started with Unum and I ended up with Chubb. It's like going into a store, right? And you think, hey, I think I need a new pair of shoes, and you walk out with a new shirt. Bear with me. I'm just updating my information so I don't forget. And type in, if you want to look at another company, pop it in there. We just kind of went around the block on insurance. I think we went around the block a few times on it. Taking a look at insurance companies. Insurance companies are really getting it done. They did really well this past year. And Warren Buffett started investing in Chubb. So it's a good space for me. Good space to look at and buy some shares and make some money. All right, so I'm gonna plan to buy Chubb and replace Allstate. All right. So that's where we're at with insurance. Any other comments on insurance? Unum is a good one. It's been performing really well. Congrats on the gains. Allstate's been performing well. Can't argue or can't complain about the performance on Allstate. And I think Chubb, has a pretty good, value proposition. Here's all three. Well, look at that. You own the best one. It's done the best out of three. The one that's kind of lagged is Chubb in the past year. But, I'm looking at their fundamentals and I'm like, they got the best fundamentals to price. So I kind of got the middle one, and XDiv, you own the best one, but I don't mind switching over to this one. I think doing my own analysis, I'm like, wow, it looks really good. Warren Buffett's an investor, so that's good enough for me. All right, so that is CB. Good one. That was interesting. So we said no to AMD. We said yes to NU. We said no to OpenText. Yeah, so good question. So Black Swan investor and FYI, so I've worked in the software industry for quite a while. So I know software and especially enterprise software. And I own DocuSign, I own Zoom. The software companies, I'll show you what I own and what I think is interesting out there. So Adobe, I think Adobe's interesting. Adobe's like a high quality company, best in their category. And I think they're discounted right now. The market sells them off, and that's when I buy them. DocuSign's doing really well. I think this is an acquisition target. Zoom is an acquisition target. I don't believe in AppLovin. I'm actually short AppLovin. I believe that I shorted 4 shares just to keep my eye on it. I don't believe in CrowdStrike. I think they got problems at CrowdStrike. But I do like Zscaler. I like Zscaler. It looks really good. I think Zscaler is a good stock. So I would say Zscaler is out there. I'm waiting for 2025 to start making some bigger moves. Zscaler is going to be one of those stocks that I buy. That's a software company. It's in security. CrowdStrike, I shorted and had a good gain earlier this year when they had their whole fiasco. And I just don't think that they are going to get their act together consistently. I think they'll probably surprise us again. It has had a good rise, CrowdStrike. Palo Alto is expensive. And then the best one out of the pack, I thought, was Zscaler. They're growing really nicely. Let's take a look at those three. So we'll look at security software. The other one that isn't bad out there is CRM, Salesforce. And those are the ones that I can think of. But if we look at, so Zscaler, Palo Alto Networks, and CrowdStrike. CrowdStrike was like, running away with it until they blew up the world with their flawed software. And you see where CrowdStrike just took a hit. But Zscaler's kind of just been lagging. But if you look at their growth and their fundamentals, it looks good. It's like, I look at their revenue growth, it's comparable to CrowdStrike and Palo Alto. It's just not as popular. And I'm okay buying something that is just structurally really quality and that is in the right space that's going to make money. Zscaler could be acquired. There was an acquisition that didn't happen. Google was going to acquire a software company. They were privately held before they IPO'd, and that acquisition didn't happen because the CrowdStrike fiasco happened, and the company that was being acquired canceled it. They said, "No, we don't want to be acquired. Now we're worth a lot more because CrowdStrike just kind of created a lot of opportunity for us to go sell our software." So, having said that, Zscaler could be an acquisition target. There could be a lot of things that happen and would reward shareholders on Zscaler. CrowdStrike, again, I think for them to release an update like they did and then kind of go, oops, we didn't, it was just a simple error. Really? Was it simple enough to catch? What's your quality control like? There's probably something back there that is likely more concerning than they're leading on to investors, because obviously if they told them, hey, this is how bad our software development process is, the stock would crash. But anyway, so I think the security space, Zscaler looks good. What's another software company that I've seen recently? So Microsoft is fairly priced. DLocal's okay. I'm not a big believer in it. I'm just watching it. Yeah, the one that I plan to buy is Zscaler, and I'm invested in several of them. I'm buying into Adobe. I own DocuSign. I would buy DocuSign on pullbacks, but I'm comfortable with that position. And I've got Zoom. I'm an Oracle employee, so I don't talk about Oracle at all, and I own the stock. And those are the software stocks that I own. It's a really good space. Software is a very profitable space. And, you know, if you're going into software and you buy at the right times, you're going to do great. Yeah, take a look at Zscaler. Hopefully it's an idea that you can do your homework on. Remember that I never provide financial advice, never make a recommendation to buy, hold, or sell. Just sharing my experience and what I'm doing as an individual investor. And appreciate your comments. All right, XDiv. Gen Digital. So how is Gen Digital doing in this sector? So Gen Digital. So we're talking about security software. So it engages in provision of cyber safety solutions. Yeah, okay. Yeah, it seems these guys are a security software company, maybe a little more toward consumer versus enterprise business users. So let's take a look. So financials, revenue growth is not great. Good news is they didn't go red, but it's just a slow growth. They are a smaller company, 3.8 billion. They grew nicely. They've grown nicely. Okay, good. So gross profit looks really good. The gross profit margin, 80%. Excellent. Free cash flow, excellent. It's really expanded nicely. Looks good. So that looks good. So the revenue looks good. The margins look great, 80% margins. That's why you buy software companies. And let's just make sure the balance sheet's good. So cash, 737 million. Debt, 8.56 billion. So they have net debt of 7.85. EBITDA, 1.83. So the debt is a little high. So that means they'd have to pay back debt in 4.5 years. That is a red flag. Why are they carrying so much debt? If you look at like, let's go Zscaler. So Zscaler has 2.7 billion of cash and less debt, like 1.24 of debt. So they have more cash than they do debt. Why is a software company carrying that much debt? I think because they acquired some of these brands, like they acquired probably Norton and so forth, which maybe was a good idea, but that's just a lot of debt. Let's look at their financial statement and look at their interest expense, 628 million. So that's why, debt does become kind of a problem, right? Now they are producing good cash. That's good. It's just a red flag, right? It's not, their balance sheet's not as good as Zscaler. And their growth also concerns me. It's like, why aren't you growing a little faster? So I'd have to get comfortable around why are they not growing as quickly as they should or as I would like. And it's a good idea, but right now I'm still thinking Zscaler is the number one security stock for me. My computer's like slow. What's going on? Maybe this is in market cap 17 billion. Zscaler is 28 billion. Yeah, I think this company grew through acquisitions. They acquired these companies. That's what built up the debt. LifeLock. Okay, yeah. I remember seeing these things, on TV and stuff on commercials. So interesting little company. Over the 1 year, it's up 19%, so that's good. But the 5 year, not so much. Not an exciting track record. Again, I like Zscaler because of its balance sheet a little bit better. The 5 year on this one is positive. I mean, look at that. It really got up a couple years ago. And I think that's maybe why investors are kind of shy about the stock. But the 1 year is down. I think it's an opportunity. The growth is excellent, right? These guys are not growing very fast. These guys are growing fast. So I like Zscaler. I think it's a good growth company, and we'll probably be investing in them come January. Good one. Thanks for bringing it up, XDiv. We just looked at 4 security software companies, kind of kick them around, see which one is looking best. And I could be completely wrong about CrowdStrike. They could be like a big winner. But we'll see. We'll see. I know that they were a darling like 9 months ago, and then they had the big fiasco, and voila, not so awesome anymore. All right, so we went over security software. Went over insurance. Let's see what was pretty hot out there. Go back to so real estate was really hot. Technology was hot today, just today's trading. And within real estate, I can't think of a name that I would want to look at. I mean, CTRE is one of the stocks that I own. I like CTRE. Reason I like them is they build housing where they provide housing to elderly people that need health care while they live there. And just looking at demographics, right? We have a big portion of our our population in the U.S. is getting old. We got a president that's leaving that's 78 or 79. I forgot. We got a president that's going in that's like in the 70s. Forgot which number, 75, 76, 77. Those dudes are old. And a lot of people are of high age, and they need a place to live sometimes that where they have medical attention, nurses and stuff. Maybe they're going through some type of cancer and they have to have a lot of care. And that's what these guys do. And it's been a really good stock. So this is my one real estate investment trust. For the year, it's kind of been giving up some of its gains, but it was really rocking for a while. For the 5 years, up 31%. And it pays a nice dividend. So I'm good with this one. I still believe in the stock. I think it's a good stock. Now, I own real estate that I rent out, residential real estate. So I try not to buy too many REITs. I just have this one, and I'm good with it. All right, so that is the one real estate company that I have. Of course, I have a bunch of technology companies. And so I looked at AMD earlier, but said, I'll pass. And the reason for it was I'm buying into Qualcomm. And the reason for it is I just think they provide a really good proposition or thesis to the investor. You could see that they were really cranking up for a while, just getting hyped up because of that, the AI build out. And then they really came back down. But when I look at their financials look pretty darn good. Looks like stockanalysis.com is getting a lot of traffic. And they're beginning to grow. Look at the quarterly. They're growing 18.69%. It's a big company, big outfit. And they produce a lot of cash. Their growth is really coming up. They had a bad year in fiscal year 2023, which ended a year and a quarter ago. And now they're back to growing. And they're very profitable, very good margins. Free cash flow is really good. And their gross margins are really good, 56%. So Qualcomm's where I'm putting my money. And the good news is it gave me time to build a position. And I think this stock's going to work. I've owned Qualcomm in the past and made money, sold it. Now I'm back to make more money. I've owned Broadcom, made money, sold it. And I'm not ready to buy Broadcom stock. I think it's overpriced. So, Black Swan Investor. Yeah, I can't argue with LNTH. So let's look at LNTH. This is a space like healthcare has been beaten up, but there's a pocket of healthcare where it's doing really well. This is one of the pockets. Healthcare, but these guys are a drug company, and I would put them in a high growth pharmaceutical company. These guys, they create drugs, and they've been growing really well, 24% growth. Looking at the quarterly, 18%. It's understandable that your growth rate continues to slow down because your number keeps getting bigger, right? It's harder to grow at a high percent when you're doubling your revenue. So the company looks good from a growth perspective. Their profitability is good. Their gross profit's 64%. Free cash flow is there. So when I value LNTH, it's discounted because it has good cash. The cash supports the stock price, and their earnings per share support the stock price. So this is a good one. I own two others that are like this, smaller biotech, fast growth pharma, which is United Therapeutics and Catalyst Pharma. I mean, I would be interested in buying more Lantheus, but I own those other two, and I own Pfizer, which is beginning to work. I think Pfizer is going to be a winner for me in 2025. This is a really good idea. This is a place to play, and you notice higher discount rates since it's a smaller company. So this is a good little company. Also, acquisition target, right? These are smaller companies that could be acquired by a bigger pharma company, which is typical in the space. So I would say that that is a good one. So this industry, once you get approved for a product, correct, yeah, and a patent I think gives you the right to sell for longer than 10 years, and then hopefully, like some drug companies are good at, they come out with like the first generation of a pharmaceutical, and then they improve it, and there's a substantial improvement. They go through clinical trials, and then they get commercialized new generation of drug, and they kind of cannibalize their own drug before it goes off patent. Then you kind of keep on that, exclusivity period. You keep expanding on it, but you have to be able to explain or prove that there's a substantial improvement in the drug. You can't just change the packaging and say, oh no, it's changed. So most definitely, it's a very good space for the successful companies. This company, Catalyst, United Therapeutics, they're doing really well. Harmony is also really good, by the way. Harmony is a really good little company. They're discounted. So this is a space within healthcare. I know that healthcare insurance payers like United Healthcare, Humana, they've just been getting really beat up. But this pocket within healthcare looks really good. Very good. Yeah, I believe you. I think these are good little companies, and they're all here, right? So I wouldn't put HIMSS in the category. They don't create pharmaceuticals. But United Therapeutics, Catalyst, especially Catalyst, is an acquisition target. Lantheus is an acquisition target, and Harmony is an acquisition target. Those guys are going to get acquired at some point. And we haven't had a lot of acquisitions over the last couple of years. I think part of it is the administration, right? We had a Department of Justice that was ready to fight anybody. It was like, man, they're going after Google and all kinds of people. And the thing about acquisitions, I think none of them happened. So I think we're going to see a high volume number of them because the new administration, I think, is going to be more friendly to acquisitions. That's my feeling on it. So having some smaller pharmaceutical companies wouldn't be a bad idea. And if you're fortunate to be a stockholder, when an acquisition happens, I mean, it's kind of overnight. You have a bump of 30, 40, 50, 60, 70% on that stock price, and you're a big winner. I owned Activision when they got acquired by Microsoft. I've owned a couple companies that overnight, it was like, boom, I just made a nice big gain. So hopefully those days come back and it makes small caps even more desirable. We'll see. All right, cool. So it's the end of the week. Thanks for tuning in. Thanks, Black Swan Investor, for tuning in. Thanks for joining Discord. I think you bring a lot of value, so I appreciate that. It looks like a lot of people that are on the West Coast are probably tuning into this live stream. I live stream in the mornings when I have free time, and as well as the evenings. I'll try to live stream quite a bit this weekend, as well as next week, since I will have some free time. Really enjoy talking about stocks. I enjoy getting my portfolio where it produces like really good gains, and I can pretty much expect that I could have a really comfortable retirement, take care of my family. My kids need something, no worries, and get to take care of my family quite well with my stock portfolio, as well as my real estate portfolio and my crypto portfolio. Yeah, I appreciate you tuning in. It was a really interesting live stream, and I appreciate what you bring. All right, guys. So last call. It is the last call for any stock that you would like to talk about or a topic. It is your last chance to bring it up. Of course, you could always come back on a live stream that I have in the future and bring up a stock. All right, guys. Well, everybody have a terrific weekend. Thanks again for tuning in. I appreciate it. And I appreciate you viewing my videos. Join the Discord. The Discord is really active. It's on the details of the channel. And guys like Black Swan Investor really bring a lot to the Discord. I think you could get a lot out of it if you're in it. Of course, be aware there's bad actors on Discord. There's scammers. Don't ever, people pretend to be me on Discord. It's probably not me. I will never send you a friend invite or anything like that. Just be aware of that. And don't ever transfer money, obviously. Don't ever do that. Be very careful when you're online, especially on Discord. But I think you can get a lot of value by seeing how people are investing and following their investments actively. You get to know people, get to know what they're about, what they're investing in, what their outcomes are, or what they plan to get out of their investing. So take a look at it. Hopefully I see you guys on there. All right. It was good to see some old friends. XDiv. Good to see ya. Bad Omen. Man, it's a cool handle. And then Black Swan Investor. Good stuff, man. All right, guys. Have a nice weekend. Take care.